Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate mumbo jumbo into plain English. Today we're diving into 89bio's latest 10K, their annual report. Think of it as a year-end school report card, but instead of grades, we're looking at dollars, deals, and potential disasters. Get ready, because this report has a few twists and turns that might make you say, wait, what? 89bio is a company trying to create new medicines for liver and heart problems, specifically focusing on MASH, a serious liver disease, and SHTG, a condition with really high triglycerides, a type of fat in your blood. The main character in their story is pegozafermin, a drug they hope will tackle these issues. Now, 89bio seems pretty excited about their progress with pegozafermin. They even got something called Breakthrough Therapy Designation from the FDA, which is like a fast pass for drug development. This was for MASH patients, and they're also working on getting it approved in Europe. To get pegozafermin approved, they're running two big Phase 3 trials, which are the last step before asking the FDA for permission to sell the drug. One is for MASH patients with less severe liver damage and one for those with more advanced disease. They expect to have some results in 2027, but the full picture won't be clear until 2028. For the other condition, SHTG, they're also running a Phase 3 trial and expect results in early 2026. Interestingly, 89bio doesn't own all the technology behind their star drug. They have a deal with Teva, another drug company, that gives them the rights to use certain patents and know-how. They have to pay Teva some money up front and could owe them more later if pegozafermin hits certain milestones or makes a lot of money. Like any drug company, 89bio faces a ton of regulations. The FDA has strict rules about how they develop, test, and manufacture their drugs. If they don't follow these rules, they could face serious consequences, like having their drugs pulled off the market or being fined. They also have to deal with things like making sure their clinical trials are safe, protecting patient data, and following healthcare laws that prevent fraud and abuse. It's a complex web of rules that could trip them up if they're not careful. Plus, healthcare laws are constantly changing, and if 89bio fails to comply, they may be banned from government programs, face civil and criminal charges, and incur reputational harm and diminished profits, among other outcomes. Moving on, let's talk about the money. As of February 24, 2025, there were only about 5 official stockholders of record. But don't let that fool you, many more people probably own shares through brokers and other institutions. The company doesn't pay dividends, meaning they're not handing out cash to shareholders, and they don't plan to anytime soon. Here is the part where we get financial jargon such as interest rate risk, which is just a fancy way of saying that if interest rates go up, their investments could lose value and it could affect their debt. Also, since they have operations in Israel, they're exposed to changes in currency values, which could also impact their bottom line. Now let's take a peek at their financials. For 2024, research and development gobbled up a whopping $345 million, a huge jump from the prior year. Most of it went to paying BIBO for those capacity commitments I told you about and clinical trial expenses for their Phase 3 program. General and administrative costs also saw an increase, mainly due to more people on staff and higher consulting fees. All in all, their net loss for the year ballooned to $367 million, which is definitely a number that raises eyebrows. Now here's the part where they bring in the big guns. Their auditors are KPMG in San Francisco, California. They're basically the financial watchdogs, making sure everything is above board. 89bio admits they are a clinical stage company with limited history, and their financials are still not solid. Remember that $367 million net loss I talked about. Pegozafermin still has not completed a pivotal trial. There are also risks that their computers can get hacked and that their internal controls might not be that strong. So there is a lot of risk involved, just like with every clinical stage biotech company. One thing that they were really focused on in this report is their manufacturing capabilities and agreements. To make pegozafermin, they have a deal with BIBO, and there is a lot of money involved. But what if they can't get the drug approved, or what if Teva pulls the rug from under them and terminates an agreement? What if their third-party manufacturers stop being third-party manufacturers? A lot of things that can go wrong here. It gets even more concerning because other companies developing similar products might have some adverse events that could have a butterfly effect and hurt 89bio, too. 89 Bio also recognizes in its risk factors a number of world events that might affect their financials, such as the war in Ukraine, the situation in Israel, tensions in China, and macroeconomic situations. They mention that these could cause serious adverse consequences and affect their business. 89 Bio also admits that internal controls may not always work to prevent all errors from happening. It's worth noting that 89 Bio confirmed they are not a shell company, so they are a real business trying to deliver something and not an empty business that exists merely to hold assets. So what's my take on 89 Bio? They're betting big on pegozafermin, which could be a game changer if it works. But with all the FDA uncertainty, clinical trial risks, and the manufacturing agreement with Bibo, there are a lot of things that can go wrong. Plus, the competition in this space is fierce, with giants like Novo Nordisk also chasing similar goals. That massive loss of $367 million is hard to ignore, showing they're burning through cash fast to bring pegozafermin to market. If they don't raise more money, they may need to pause or cut back development. Overall, 89 Bio is a high-risk, high-reward play. If pegozafermin succeeds, it could be huge. But if it stumbles, investors could face significant losses. Thanks for watching. If you enjoyed, please subscribe, like, and comment.